let's talk about the September's numbers. They beat expectations, but this data is 2 months old. So how useful is it in understanding where the economy is right now? And what do you think people are doing with this information? How are they digesting it? Clearly wondering about what October did.
Well, I think Karina did an excellent job of summarizing the whole thing for us, Sean. And the bottom line she enunciated, she said it turns out to be a very mixed report, in fact, because the big takeaway on the plus side is that you have 119,000 new jobs being created. That was more than double the consensus figure of around 51,000. So that's a big plus. But the unemployment number goes up. That's a negative. And you have revisions on the last 2 months worth of employment data. Those were negative. So you got pluses, you got negatives, and so forth. The question is, what does the market think is actually going to happen? And there's been a dramatic change in the last month. A month ago, 99% of the market players in the Fed funds futures market thought that there'd be a 25 basis point cut in interest rates on December 10th. Now that thing has dropped down to only a 40% probability of a 25 basis point cut. 60% of the market participants think they're going to steady as you go. There'll be no change. So that's what where we're at right now. And
okay, so let's talk more about these jobs and the unemployment figures, because right now the rate climbing up to 4.4%, and that is the highest since October of 2021. And with these recent revisions, people are going to wonder, is this going to happen again? So what about the direction of the labor market, and how concerned do you think the American consumers and investors are at this point?
I think the market, the job market, is weakening, in my view. And the Fed, you have to realize that historically the Fed watches the labor market very, very carefully. They watch that more carefully than anything else. So in light of that, what's going on at the Fed? It really isn't the December 10th Fed futures, the Fed funds market that's going to be the key. They've already announced they're loosening up monetary policy. They're going to stop quantitative tightening in December, and they're going to change the regulations, the supplemental liquidity ratio regulations on commercial banks, which also will give the banks more capacity to loan and loosen things up. So I think the Fed is already loosening the thing, and that loosening will continue. And it will continue precisely because I think the job market's getting weaker on us.
Yeah, let's talk.
And that we do see that in the unemployment rate. I mean, that top line unemployment rate is going up.
Right. Healthcare added 43,000 jobs, while transportation and warehousing lost $25,000. I wouldn't call that a chasm between the two, but it is a big divide. What do you think is driving this?
I think what the big thing that's driving it is a tremendous amount of uncertainty that's actually in reality there, but it's not even fully being appreciated in the markets yet. And the uncertainty comes from the Trump administration's tariff policies. That's the biggest uncertainty out there. No one has a clue of what's going on, and we've got all these reciprocal tariffs. They're actually going to be decided in the Supreme Court. We're going to get a Supreme Court decision probably within a month or maybe a month and a half, Sean. And maybe those will be shown to be illegal. I think they should be illegal, by the way, because the Emergency Powers Act that's of 1977 that's being used to invoke the reciprocal tariffs, it's kind of a joke. I mean, we've had trade deficits since 1975, and they certainly aren't an emergency. And to have an emergency being imposed, a foreigner has to be doing something to the United States. The trade deficit actually is created by Americans spending more than they produce. So it isn't some foreigner manipulating something that's causing the trade deficits. It's the Americans that are spending more than they produce, which for Americans, it's been a good deal.
Yeah.
It's been a great ride having those tremendous trade deficits.
Steve, I also want to point out that if you look at the numbers, if you take out what AI has done to these markets, you have analysts who say we would be in a bear market right now. Couple that with the fact, if there is not a drop in rates next month, could you expect the White House to once again boil over with frustration and lash out and once again threaten to sort of have much more hands-on, a political hands-on on the Federal Reserve?
Oh yes, there'll be plenty of that. No matter what they do, because even if they reduce it by 25 basis points, Stephen Moran, who's the Trump-appointed governor, that's also taken a leave at the President's Council of Economic Advisors. The last meeting, he wanted a 50 basis point cut.
Right.
So he wanted more than they actually came up with, and he definitely will pile in there, echoing the president's sentiments that whatever the cut is that they make, he's going to want more.